Hello, dear traders. This is Alex Gerchik and Gerchik Co Company, and today we're going to have a video where I'm going to explain about the levels and the patterns, because a lot of times people, they're misleading the pattern with anything else. The pattern is something that you can put a few bars together and call it pattern. Let's say false breakout, it's a pattern. Breakout, it's the pattern. Head and shoulder, it's a pattern. What I'm teaching my students and everyone else is to understand the levels, because if you don't understand the level, if you don't understand where the price is going to turn around and the price is going to change the trend, or how this basically, let's say euro is going to the levels, how fast, how slow, or anything else, it's totally different than just to have a pattern. What we see something in the books, like most of the books, they have all the patterns. There's everybody comes out with a pattern. You can probably come out with a pattern as well, come out, call it the pattern of Elizabeth Queen or anybody else, and call it pattern and make an explanation. Theoretically, all the patterns, they have lives. What we're going to talk today, we're going to talk about the levels, because they're very important thing, and then how to use the pattern. And right after this video, you're going to be able to download our patterns we're going to give you for free. Right under this video, you can get into our website, download the patterns, and make money. But the most important thing, and I want you to not forget that, it's you have to understand the levels. So I'm going to start showing you the charts. I'm not a guy to talk. I'm a technical guy. I trade only technical analysis. I'm going to show you today the charts. And then after I show you the chart, I'll explain for you how to isolate the move, how to understand the move, how to see it's going up or it's going down, why it's going up or why it's going down. All right, so we're going to start with your most favorite pair. It's a euro dollar. As you can see, this is a daily chart. My advice to you, very simple. Don't try to work in the little time frames. If you want to understand the price movement, if you want to understand the levels, work only on the daily chart. You can work on the weekly chart, even the monthly chart, just for you to understand. The bigger time frame, probably sometime a little bit bigger, it's going to be your stop loss. So as you can see here, we have our levels. Basically, how you draw the levels. This is a very important thing. Usually, there's a few different types how you draw the levels. The first one, I mean, you can call it support and resistance. I don't call it support and resistance for one simple reason, because a lot of times it's very easy to call it. Let's say you call it support and resistance, and when you start to trade, it's not a support, it's not a resistance. This is a level. For us, the very important thing is how they stock or future or a Forex or anything else behave itself against the chart level. And I'll show you a chart just for you to understand, which I drew it on Monday. On Monday, we have I do a free webinar, and I'll show you just the one chart where you can see that on a 5-minute chart, you see, it touched the level which was drawn way before, penny for penny, penny for penny. And take a look, there was another level that's we touch again, 63,880 and 63,180. So if you go on daily chart, you can see, you see, 64 and 63,180, right, penny for penny. So we're going to start with the euro and go to a few other instruments. As you can see in the euro, as I said, you can draw the levels. First of all, the more time the instrument touched the same price, we consider it as a limit buyer or a limit seller. That's a very important thing. Second thing, it's when the price is exchanging, like everybody's called, let's say, support and resistance, where the price is changing in direction right here. The low of this bar, usually you always take an extremum. You don't take close or open, you take an extremum, because you have to see who stopped the price. And this is an example. You see, it was drawn way before. So I want to show you, if you draw the level at the right point, you can have an extremely good entrance point already with your pattern. So let's see. The low of the bar is 118,378, and the high of this bar 118,366. Only 2 pips difference on a daily chart between the touch of the price. Here's another one, another touch. Let's see. 118,366, penny for penny with this one. What does it mean? When we have something like this, the picture like this, we understand one thing. It is a seller or it is a buyer, and the most important thing, the level it's being drawn in the right price. It's very important. I'll show it to you one more time. Hold on. That's what I usually do. I always make it print screens, so I'll explain for you. You'll understand where I draw and why I draw. Okay, here you go. Very important thing when you draw the price, it's for you to understand where to draw the right price. So the very important thing, you take turnarounds, you take big paranormal bars, or the places where the price touching the most. So that's what it is. Look at this. Now we're going to draw. That's the base for the level. Very important thing. This is a conclusion where you make that the price switches direction. This level we call mirror level. You see, where the support becomes the resistance, how you call it. That's the very strong level, probably one of the most strongest one. And this is as well proof that's the level has been drawn in the right direction. And as you can see, after that, for example, once you draw the level, you see this price is changing, you can check and do the most important thing. And what is that? Just for you to understand. False breakout. See? And another false breakout. You see? So when you understand the level, you have to understand where the price and how the price behave itself. So as you see in this picture right here, see? You see that the buyer is stronger than the seller. It keeps the price right above the level. You have a false breakout, which usually shows the end of the move, which is good. It takes the stops and then it go much higher. So when you go look at this picture, I'm going to save it and I'll post it as well. We'll call it Euro levels. In this picture, the first thing you do, you isolate the level. That's a very important thing. What we see here, and that's what it is, very important. You see, that's the first stop after a big bars. This bar, which has a more than average ATR, ATR is an average through range. The more bar, what is the ATR? It's the energy. So what do we have in this bar? You see 1 and 2. It's a paranormal bars. So usually, as you see, the first stop, it's usually a level. So right here is the level, and as you can see, it's been tested by the false breakout, and you see it's a consolidation and then the breakout. So as you know one thing for a fact, if you see your instrument does not go down after a big move, you understand it's going to go higher. So this is the levels that I draw, and every instrument you're going to see, they have already the levels. On Monday, I do technical analysis and I put the levels. You can check all of them. So as you can see, one thing for a fact, it was a draw on 2 levels. One of them is 123.23, which was the paranormal bar, high of the paranormal bar. And the second level right here, you see, first stop, 122.97. Very important thing, it's when the instrument gets into the long or short zone. It's very important. Right here, you see, we're in a zone. So you don't trade here. Between 124.14 and 123.33, you don't trade the instrument because the instrument is trying to basically get the gasoline. This is a gas station. Here, where they basically take the gasoline. And then, once basically the gas is there, the instrument will show you where it's going to go. If it's going to close below the level, or especially below 122.97, you have a very strong short signal. The most important thing is to understand who is going to sell. That's a very important thing. Nobody teaches this but me. I'm the only one who can teach you where basically the people are going to panic. And if you see all of these guys, they're going to panic right here because it's going to be break of the trend. Once these guys above 122.97, they all feel comfortable. They're all still making money. Once these people, it's going to go below 122.97, it's going to get destroyed. You're probably going to go all the way low. So the most important thing when you draw the levels is to slice the chart into the zones. And then you'll understand, first of all, what the zones are going to give it to you. A very understandable entry point. That's what the zone is going to give you. Second thing, it's going to give you a direction. Because once you get out here, you know it's the pure long because the instrument did not go down. Once it get out here, it's going to get short. And the third thing, it's going to definitely help you with your pattern. Because if you're, let's say, trading the breakout, that you're going to put a buy stop right here above the level or sell stop here. If you are trading a false breakout, which you see was right here, false breakout, you see touch the price. I'll show you in a 5-minute chart. You see, almost penny for penny. You see how would the price of the stock stop right here? Look at this. Low 123.24, low 123.24, penny for penny. So what it is, what we did, and we draw the chart. We draw the price on the daily chart, and as you can see, it stopped right there. That's a very important thing. Take a look, penny for penny. It started the daily chart and it's turned around on the daily chart. We're also going to save it, and we're going to put it. That's very important thing. When you do homework, you have to also put it explanation for yourself. So the very important thing is to put explanation. So what you do, you say right here and right here. And here you put, that's what I usually put, the comments for myself. Level comes from daily chart. Penny, penny for penny. And I say, so what do you see? You have daily chart and you have 5-minute chart, and you always know, you see, euro, penny for penny. I have a lot of pictures like this. That's what I usually do. That's how I understand if there's a real buyer or a real seller in the picture. So that's what the euro. So right now we have only we have right now a total understandable picture for euro dollar. So very important thing is to understand where the panic is going to be. Panic low or panic high. Don't forget, panic low is when the buyers getting out. Panic high, it's when the sellers, short sellers are getting out and the big buyers are stepping in. Very important thing. Let's go with the British pound. Very important thing. Take a look. Very, very strong channel. Take a look. Very strong channel. You see, we closed down. It was perfectly fine. That's how the level initiate. You see, right here. So we had the price, and that's what we have today. If euro is going to manage to go back to 139.80 right here, we can have a big upside. Big upside. So as you can see, you know one thing for a fact, what to expect from a British pound. Very important thing. So when you do, you draw the levels. As you can see where the levels are coming from, they turn around, a lot of touches like here, and when they basically do in a high or paranormal bars. Paranormal bar, we call it the bar with at least 2 or 3 ATRs. It's not that many of them, so you have to see how the basically instrument behave itself at the paranormal bar. Japanese yen, right here. You see, that was the level from before. You probably, I would draw it lower. Let's go for a weekly chart. You see, that's what it came, but here is the level, which is technically lower. So that's what it is. You see, let's see, we'll do it right. Low 108.49. Just for you to understand, you see, I draw all the levels from the left side, not from the right side. So if we see a continuation or assurance, basically assurance that it did touch it, it means we draw the level at the right price. So let's see. Low 108.499. Low 108.508. Less than 1 pips, the difference. It means we draw the level to the right price. It's a very important thing. So what you see here, you had a false breakout today. Let's see. We'll print again. It's a daily chart, and then we'll go to the then we're gonna go to lower time frame. So that's how we isolate. Okay, this is the base. This is the base. and this is assurance. Okay, daily. We'll save it and we'll call it again a level. Now, in order for you basically to use the pattern itself, you have to go in, let's say, in a small time frame, 5 minutes or any other charts. Okay, so very important thing. Hold on. 108503. Okay. You see, that's what it is. That's the false breakout right here. Something that's withdrawn on the daily chart. It did totally put out the daily chart. So right now we have to go back on the daily chart. And what we see here, that's basically a very, very large range. Very large range. Usually, as I said before, don't try to look for some areas right here, because they usually you're going to get knocked down. That's what you lose most of the money, all of you. Because here it's an accumulation of the position, and everybody who's trying to accumulate, obviously they're accumulating with your money. So very important thing, it's to isolate how you're gonna draw the levels and how you're going to understand who is building the position. And the last one, I'll give an example. It's a oil. As you see, almost penny for penny. You see right here. We're gonna go and draw the level with you. Okay, that's what it is. Very important. We'll go right here. That's the base. And this is a continuation. So right here, usually, and we're going to put daily levels, penny for penny. Okay, then we're going to save it and we're going to go to the 5-minute chart. Oil, penny for penny. That's a very important thing, where and how you draw the level. If you didn't put the right thing, okay, this is daily, we'll go on the 5-minute chart. Take a look, penny for penny. So we're gonna make print screen. And we're gonna go like this. And we're gonna draw level. Hold on. Level on the 5-minute chart came from daily chart. Okay, so what do you have here? You see, daily chart. Then I'll show you another level. Okay, this is the daily chart, and that's how it's behaved. We'll save it, and we're going to say oil 5 minutes. Now I want to show you something else. Look at this. On a daily chart, you see the price, basically the move on the price. That's what this basically the oil is. Take a look what it is in the 5 minutes. See? That was a very strong level in the 5 minutes. See? So that's how the price goes. It goes 1 for 1 with the daily chart. That's what it is. So you know one thing for a fact, the oil is going to break 64.72. We're going to go higher, but if we're not going to support 63.108, then we're going to go much lower. So my dear friends, our company have a lot of different patterns, which is going to help you how to trade. All of these patterns you can download from our website, absolutely free. A lot of patterns you can download and enjoy, and follow us. Look at for our levels. I don't do too many English webinar. This one was done specially for you. I do have a lot of foreign students. So if you like it, put the likes and enjoy yourself. It was Alex Gerchik. and the Gerchik Company, and please download all the patterns from our website.